Well, thanks again for joining us. We're going to take a look at our livestock trade with a little help from Chris Swift right now of Swift Trading. And Chris, what do you say we go dive into our futures trade here, and then I want to get your thought on this. Okay. First of all, here, let's take a look at our futures on live cattle. Mixed. June down 22. We have the August. I assume August is where most of the volume is now. That's up 25 at 103.33. October up a nickel at 103.95. Deferred's just a touch weaker. Feeder cattle. We currently have the nearby August up $1.22 at 134.35. September 93 higher at 135. Lean hog trade so far today on the nearby lean hogs. Let's take a look at what that June contract is doing. It's 53 higher. July now 83 higher at 86.75. So a little firmness across the board this morning.
Thank goodness after last week's deluge of selling, then yeah, it's nice to see a little bit.
Got a little making up to do though if they want to catch up where they were Thursday.
Yeah, it really does.
So what did that do to the technical chart pattern?
It didn't help. It's new contract lows in both fats and feeders coming down through here. The hog market's still holding real steady. We're just kind of pencil pointing into a triangle for the hog market and waiting for Chinese news to come out and start saying that we are buying U.S. pork. I think everybody's sitting around with bated breath waiting for that.
Kind of fascinating, isn't it? That for all the posturing and the tough talk, like we're not going to deal with you, you're not going to deal with us, and blah, 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 blah. And 2 weeks in a row, they buy huge amounts of pork. But it goes under the radar screen. You don't know it until the weekly report comes out. And they bought soybeans, too.
Yeah, they bought some beans, too, yeah.
So what does that mean for negotiations? They're buying anyway.
I think they've got to have it. I think is exactly what it boils down to. Just from what little bit of information that we can get out of there, it doesn't seem like that they are in any kind of gluttonous position of any kind of commodity out there.
How much is that Mexican tariff threat hurting the livestock?
It's not helping it any, but it's really not that bothersome either. I think with all the tariff issues now that we've had it for so long, and all we're doing is just throwing one tariff on top of another, you kind of lose that impact from it.
Tariff fatigue?
Tariff fatigue. That's a good way to put it, yeah. I never thought about that. I may use that.
Tariff fatigue.
Tariff fatigue.
Right, I'll just take a 15% commission on that. All right, so moving forward now, I mean, we've got a little bit of a bounce today. How important is it that we maintain that into the close today?
Well, it would be very important to be able to. We could see a couple of weeks here where the cattle market settles down some. We've taken a lot of premium off of the feeder cattle market. We've narrowed those bases down to pretty much even now, so I think we'll end up probably not too awful much lower before the week's over with.
Thanks for coming in.
Yes, sir.
Appreciate it.
Absolutely.
Chris Swift, Swift Trading Incorporated, right here in Nashville.
All right, as always, gentlemen, thank you very much.
Thanks for joining us. I'm Marlin Bohling with a look at our ag commodity trade. We're going to invite some extra expert help in studio right now in the form of Chris Swift of Swift Trading Incorporated, based in Nashville. So thank you for coming on board here, Chris.
Absolutely. Good morning.
Good to have you for our weekly visit.
All right.
Things kind of gyrating around a little bit.
They really are.
So let's go take a look and let's dive into this thing. On the corn market right now in Chicago, we have a little bit of a higher tone, but we're off the highs that we had last time we checked. July corn now up just a penny at 4.28. A lot of confusion, shall we say, in the corn market today. What do you think? December now up a penny at 4.44 and 3/4 per bushel. On the soybean side of the ledger, a little bit of strength here. We have the July contract now 6.5 higher, and we're trading at 8.84 1/4. In November now 6.5 higher at 9.11 1/4. But all the action is in the wheat market today. And don't see the wheat leading all that much, but July Chicago wheat now 15.5 higher at 5.18 about a penny off of its earlier high this morning. And if you look at Kansas City wheat, similar action. July up 18 at 4.91. And in Minneapolis wheat on spring wheat trade, we have July now 9 higher at 5.61. So obviously Minneapolis wheat is lagging behind the other two exchanges. From what I hear, the planting progress pretty much caught up with where it needed to be, or got close anyway, didn't it?
Yes, it did. I think a lot of what we're seeing in both Kansas City and Chicago is some of the weather that we've had. Anytime it starts raining like real hard, it'll beat that wheat down, and it's very difficult for it to stand back up in time for the combines to get over it.
Harvest is starting.
It is.
In Texas, North Carolina, I hear.
Yep.
And
we saw some wheat West Tennessee that probably not more than a week ready to be cut.
So it's kind of a critical time. If you get damage on that crop right now, I mean,
it won't come back.
No chance to come back.
No, it won't come back.
All right. So talk to me about the corn and soybean trade.
Okay.
What are they waiting on today?
We're waiting on the progress report this afternoon. 58% last Monday is what they were looking for. Everybody is hoping that we get 70% or over. I've already talked to a couple of clients this morning that they were up all night last night planting corn. So it's probably going to advance well over that 58% what we were last time, but we'll still be short, and it'll be the unharvested acres and yields that will become the next focal point.
Well, the good side of that is that they were able to go.
Yes, yes.
A lot of guys can't.
No, they still can't. And may not be able to.
So just doing the math on that, we needed to make up 39 million acres before we run out of time. On the other hand, you actually went backwards on some acres because of levee breaks and that sort of thing. A lot of dire conditions on the early emerged corn. Some of it, they say, just may not even make it because it's so yellow and so diseased already. So this could be an ongoing situation that we won't really get a full handle on.
Right. It's of historic proportions, that's for sure. And a lot of corn that got mudded in, it's having a hard time. And believe it or not, here in central Tennessee, we're in a small drought. So it's been really dry, and we showed up on the Palmer Drought Index this week at just a real small, mild drought here in the Middle Tennessee area.
So I just want to remind everybody the planting progress back in 1995, the previous record slow planting year, at the end of June 4th, when that report came out, it was 80% on corn and 43% on soybeans. We'll be comparing today's numbers against those back from 1995. We'll come back in just a moment, and we'll take a look at our livestock trade as well.